Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's weekly market analysis for Nadex. Um, Pretty interesting morning so far. If you guys are attending for the first time today, if you weren't in our morning session today, there's obviously some news we need to update you on, some crazy kind of movement back and forth, as well as some predictions for later in the week. My voice may sound a little bit strange. It is still me, I promise. It was a very, very busy weekend. I was helping out another coach who was actually away. So I did four different games this weekend, and I'll tell you right now, you don't think about things like how much louder you need to yell with a mask on so players can hear you on the field. So I'm still paying for it, 2 days later. So it is still me. I got a cough drop in. If you guys hear some clicking, so I do apologize with that. But I promise it is me, and we'll roll how we roll. All right. So before we begin, April 13th, we're 2 days before in a normal non-pandemic year, we're 2 days before tax day. But I guess this year everything's been kind of pushed back. Um, Crazy, April 13th already. It's amazing. My kids actually, their birthday is next Monday night. Um, Got to figure that one out. Figure out what they're going to do. Although they're getting to that age where it's kind of like, eh. Like, what do you guys want for your birthday? They're like, just give me money, Dad. I'm like, oh, okay, we're at that stage. So it should be fun. Anyway, for those of you that don't know me, as I mentioned, I run a company called Keep Trading Simple. My trading style is a little bit different than other people out there. I'm not a big indicator person, meaning I don't have like 12 different indicators. I don't believe in having this indicator and then another indicator and then the secret sauce on top of another. It just, I keep things very, very simple. I'm looking for buyers and sellers. I'm a price action trader. I use supply and demand to trade charts. Um, Very, very big on money management and risk to reward ratios. I think those are absolutely essential to any trader's life. And again, one of the reasons I do these presentations with Nadex, and it's been about 3 years now, maybe I think three, maybe four. Um, it's just because I feel like it's definitely another arrow in a quiver. It doesn't matter what you're trading or if you're brand new. I definitely think Nadex is something that should be added into your trading arsenal. Um, Created a number of different trading systems. Some of the ones that are more Nadex specific were like 30-minute trader, 5-minute binary courses. There's a newsletter. There's a high volatility course that came out last year when the COVID craziness was happening. There's a parabolic retracement course. You hear us talk about that a lot in the mornings. It's something that happens all over the place. It's a rather easy strategy to trade. I did spend some time inside of the advisory divisions. I'm not a 12th generation trader. My dad actually worked for IBM as a programmer, so not necessarily the typical kind of path you would think most educators have. But I kind of learned most like most people do out there, right? Back in the late '90s is when I first started trading. Really, the tech bubble was kind of my first real foray. Late 1999, early 2000. If you guys remember Y2K, um, buying books, going around. About 6 years in, I found foreign currencies and fell in love with that market. I love the speed of it. I love the longer trends. I love the fact that it's 24 hours a day. I love the idea that the leverage you get in it as well. When I first started, I had, what I thought was knowledge and I had time, but I didn't have money. So learning how to use leverage was pretty important. And then, it's funny, they don't tell you to start with leverage, but, all the professionals use leverage. It's kind of funny. And then, it's amazing how it rolls. But I went into one of the big three banks. I worked in the advisory division, realized very, very fast that, the people out there that have financial on their tag are never taught how to look at charts, read charts, tell you where price is going, and none of those things whatsoever. And I was like, well, this is not what I thought it was. And realized that my true passion was teaching people to do it themselves. Came back out, traveled the world for about, not the world, but United States, Canada. I did go overseas, but I didn't do that much teaching over there. For about 6 years, helping people get kind of started with things. And then I decided that, my kids were getting old enough. I had the little one there that's in the picture who you will hear chiming in behind me. She's at, quote, her desk behind me. She's almost 3. So she's very big into manipulation. She has her own little tablet that she calls her play, and she hits a wrong button, it goes to something else, and then she comes over, hands it to me, smiles, and says, "Daddy, you're the best." So she's already figured out how to work the system. Um, and then besides that, obviously, I coach, lacrosse for my kids. So I am one of those people that I believe in technology. So you'll hear me talk about today setting alerts. I got a question about this last week from somebody that was in attendance. They would say, "What do you mean by setting alerts?" Like, I don't know how to do that. Um, Depending on the trading platform you use, many of them out there have different abilities for you to set an alert. And it can either do a pop up alert on your computer, It can send you an email. It could send an alert to your phone. There are many different ways to do it, and there's tons of solutions. There's online solutions. There's offline solutions. You got to find the one that works best for you. But that's what I mean by setting alerts. And like I said, I'm a very if this then that trader. If price comes to a specific area or X Y Z happens, then I am interested. I'm going to give you a Nadex disclaimer in a second, but I don't have a crystal ball, so I don't know what's going to happen ahead of time. But I try to set up good sound trades that remove emotion for me. And then again, if I'm right, I'm right. If I'm wrong, I'm wrong. They met the rules that I trade, and again, I believe in the system. So that's where I'm coming from as a trader. Hopefully, that makes sense for everybody out there. As far as the Nadex risk disclaimer, because we are talking about charts, we are required to bring this one up as well. And you guys should know this information already. I mean, you've probably seen it a million times. But just remember, the trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost of any other transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience or financial resources. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and none of the material presented within this is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Now, Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. All right, now that we got that out, I was afraid that my throat would not be able to take it, and I think I practice in a few hours with these kids. We'll see how it goes tonight. Anyway, here is the agenda for today. All right. First things we do is we cover the upcoming news events. Obviously, this morning, the J&J news was a big blockbuster event. It's not something that you can be prepared for, but is an ideal setup for a parabolic retracement trade. Okay. And again, if you don't know what a parabolic retracement trade is, again, I've done the webinar, I think once or twice for Nadex already, although it's been some time. You guys can go to, I guess, the regular nadex.com webpage and go to, I believe it's education and then archives and just put my name in. You can see a lot of the things I've done for them. There's a webinar up there for that, and we will probably be doing another one rather soon here because it keeps coming up and people keep asking about it, about what that is. All right, and again, the J&J news this morning set one of those up, and pretty much a lot of the news today has set those things up. But we'll cover the upcoming news events, things that you should watch out for the rest of the week. Then we'll dive into the indices. Now, indices at 12 o'clock on a Tuesday, a lot of the movement has already happened for the day, but I'm going to show you guys where there's some potential new areas later in the week. I do think there is going to be some, I don't want to say blockbuster headlines, but I feel like there are some headlines that are potentially coming this week based off of where we are kind of calendar-wise, that we need to watch out for. And again, some if this then that for the indices. Then I'll cover Forex. Forex is a little bit slow today, but again, there's been some decent news events and some movements that we've been able to take advantage of. And I'll show you some potential areas for the rest of the week, particularly with the smaller or the shorter duration binaries. Then last but not least, we'll dive into commodities. Commodities actually had quite a big pop this morning. Again, CPI is something we've been waiting for. Inflation has been kind of the major kind of focus out there lately, and the reason why is because when inflation comes in, you control it with raising interest rates. Raising interest rates technically is not the greatest thing in the world for the indices, and it tends to crash them. So everybody's waiting for that. Fed Chief Powell said, hey, listen, we want to go above 2. We want to go moderately above 2, and we want to hold 2 for a long time. And everybody out there that was like gold and silver going to the moon, it's not quite there yet. But I think this morning, within the first half hour of the release of CPI, we watched the sentiment go up 2 or 3 percentage points from 80 up to like 83%, is what people were, the IG consumer sentiment, basically what their clients are doing. Their client sentiment, I guess, is what it is. 3 percentage points in less than 30 minutes. It went up of everybody trying to get long gold. So interesting things to look out there. All right, let's dive across and let's go across to, we're going to go here and then we're going to go over here and we'll just hit refresh real quick. All right, so where to start? Obviously, at the top, you guys know I use the scanner up top to kind of get an overview of what's happening in the world. I do it through currencies. It's easy to see, to figure out who's getting stronger, who's getting weaker. Right now, you can see it's rather flat, and there's some reasons for that out there. There's a lot of uncertainty going on. There's kind of a little bit of a staring contest going on right now with the G7 and Russia, as well as the news of J&J being pulled is kind of has everybody kind of I don't know if panicked is the right word, um, but I think concern is probably the better one, right? I mean, AstraZeneca's having problems overseas, although they're saying yes, there's absolutely risks, but the benefits of halting COVID far outweigh the risks. J&J, they're halting, and again, if you guys missed that one, it is right here, right? There's some clotting issues. Six out of the, I guess, six women or six recipients. I think they were all women, actually. Yeah, women between 18 and 48. One died. One's in the hospital. Near, and I guess it says near 7 million, but I think the total is like just over 6.8 million people have been vaccinated with it so far, and six people had problems. It's not something they would have known in clinical trials ahead of time. It's just too small of a percentage, but they're making sure it's not going to be something broader. But if you think about it, what the primary focus right now is I guess we've passed. I don't know if we passed the 100 million. I'm pretty sure we have. Um, but the new focus is like, oh no, we're going to have 200 million people done. Everybody's going to have access to it, by the end of April or whatever. This is obviously going to throw a little bit of a monkey wrench into that, right? So, you know, I think this is one of the big things we need to watch out for. Now, that headline that is not out yet that I see coming this week, um, I do believe we'll start to see a headline about spiking COVID. Now, it's not the J&J vaccine. That's not the reason why we will see COVID spiking this week. It's because of the timing based off the calendar. Many schools are on spring break. I don't know if you guys heard me earlier say that I got an email last night or a phone call / email from something at my son's school. Um, the last day that student was in school was March 30th. So you can say, hey, wait a second, you're getting a call now? Well, yeah, because he was on spring break for a week and came back. So most likely it was a spring break infestation, maybe, based off the timing of it, of how we know 4 to 7 days after exposure is when the symptoms typically kick in. So I feel that we are going to see some numbers this week, and I feel like the media is going to grab onto it because now it's juicy, right? J&J's being pulled. It's bad. Bam. We've lost one of the three bullets we had to fight COVID. Now all of a sudden, man, cases are spiking already. More variants, more mutations. And it's just, again, remember, juicy is what draws people into the news. And that's what they're going for is ratings, right? So I feel like that could be the one possible issue later on this week that we could see. Also, again, this is the other kind of bit of news out there that we're starting to see things pop up. And we haven't seen a lot of it, but it is kind of something that I think you need to watch out for. And the reason why is, again, Russia is stacking troops on the Ukrainian border. They obviously have had issues back and forth. The G7's worried about it, saying, hey, listen, you need to stop. You need to de-escalate. And right now, I mean, China and Russia are as close as they've ever been, stronger than they've ever been, based off of, fighting back on sanctions that were, tried to levy them during the most recent administration. I don't know. They've had some issues before, but they've gone across the border, and the question is, the G7 can be mad, but what can they really do? Is I think where Russia is trying to play. So, um, if you're not familiar with kind of geopolitical events, typically the Swiss is where you start focusing on, and we'll check to see where there are levels and things we need to watch out for. This is one of those things that in the past, when somebody's either going to cross borders or retreat from a border, it just happens. It's not something you can plan and prepare for. So you need to have better quality levels if you're going to trade it. Okay. But those are the two kind of big ones that we're looking at right now. For the rest of the day, the 30-year bond is not a big thing. The RBNZ rate statement tonight, it'll be interesting to see what New Zealand says. Australia is having some recent problems. They also were not big fans of the AstraZeneca vaccine as well. They said that their targets of when they would like to get people done by are being pushed back. They've lifted the goals because they know they're not going to be able to reach it. So they've had some issues. We'll see if the contagion has jumped over to New Zealand as well. Nadex doesn't actually have a New Zealand product that we can trade, but again, a lot of times what happens in New Zealand also is considered to happen in Australia. So anything that they say will have a little bit of a spillover, so there may be some opportunity out there. Now, tomorrow, we start off tomorrow morning, and I'd like to say early, but 10 o'clock is not early. The ECB is talking, and we'll see kind of, again, they're going to talk about COVID. Germany's having major problems with a spike. Merkel's not happy where they are. And again, now that the United States has kind of halted J&J, the question is somebody else going to start being like, yeah, maybe we should halt this and take a look? So we'll see. And then crude oil inventories are in right now. The forecast is that we're going to have a drop of about 2.4 million barrels. Not as high as what it was last time, or not as big of a drop as it was last time. But, We'll see later on today. I don't think the API data is been released. I haven't seen it yet. It's typically a nighttime thing, and we'll see what the forecast is coming in there. But again, COVID is bad. It's not necessarily the best thing for oil either. So we'll see. Powell is speaking at 12 tomorrow. And again, Powell has been doing a lot of speaking lately. 60 minutes, it's kind of like, what does it look like? I'm sure Powell speaking tomorrow is going to mention the CPI data today. Powell's comments this weekend were that we wanted sustained inflation. We want to see it for a long time, but it's very vague, right? I mean, like last week, he was talking about, hey, we're going to see this stuff, but it's going to come back again. It's going to be transient, but this is more than expected. He made comments on Sunday about how the economy is doing better than expected, more so than even he thought it could do. Like, so it kind of sounds like it's doing more than he even thought was possible, which again is not the most confidence building, a statement that I could ever hear, but we'll see. So I think, Powell may drop some bombs tomorrow at lunchtime, and again, with the markets being lower volume at that time, may give some trading opportunity. It could be an opportunity for a nice little spike and retrace as well. Now tomorrow night, all right, Wednesday night. I've said this week after week when we get these like Wednesday night, Tuesday night trades in Australia, these are amazing setups. Now, Australia has recently had some negative data, but right now the unemployment change, although the unemployment change is only 35,000 additional jobs versus 88 before, the unemployment rate is supposed to come down 1%. So again, this could be a big boom or bust at a time at night when you don't typically see a lot of movement out in the markets. Those create good trading opportunities. And again, drop into those shorter duration binary contracts. They tend to work out pretty well. Now, Thursday. Thursday's got a bunch of very, very important news. We see core retail sales and the retail sales numbers. Last time they were both negative month over month. They're both expected to be at 4.7 and 5.3, which is drastically different than what they were before. That's a big number. And again, remember, we're supposedly, Harkin last week. I think it was Harkin or Kaplan, maybe. I can't. It's Harker, Barkin, Cap. There's a bunch of them. They're all the same. They said that we need to continue the aggressive support of the market. But I mean, retail sales blowing it up, unemployment going down. I mean, Powell saying that the market's doing better than he could expected it ever could have done. You got to be looking at these things. So I mean, again, retail sales numbers being good could definitely be a big boom. Manufacturing index is a little bit low, not the best number. Unemployment claims coming down to 703. I mean, it's good that it's coming down. You can see actually there's the one here. I anticipate a decrease on unemployment over the year. Well, obviously, it's kind of Harker makes those statements like that, and it's kind of like sometimes you see headlines and you're like, yeah, I mean, as more people get the vaccine, more things are opening. We're seeing it everywhere. Yeah, you would expect unemployment to go down, not go up, right? I mean, if things are opening, people need to work. But, I don't know if you guys have ever heard that. My kids would say, hello, Captain Obvious. I'm like, yes, I got it, guys. My 11-year-olds are all about the sarcasm now. So we'll see. Then tomorrow night, we have the Chinese GDP number quarterly over year, which is kind of a strange release. It's like, what? The quarter versus the year? What? So kind of a strange one, but again, it is important to kind of see. Right now, the United States and China are leading the recovery efforts versus other industrialized nations. So, obviously, it began and started earlier in China than elsewhere. That's where we originally saw the lockdowns, and so it makes sense that they are farther ahead. You would expect this to be a great number. So again, just something kind of to watch out for. They're at the stage now where they need the rest of the world to recover faster versus their own country because, again, being an export nation, they need those things. But a good GDP number here could also give the Aussie a nice little kick because China gets most of their natural resources from Australia. So good Chinese numbers typically equal Australian strength. Now, going into Friday, not a lot, right? Kind of a anemic type Friday. We have preliminary University of Michigan consumer sentiment. Consumer sentiment is extremely important. Again, last time it was 84.9. Talking about an adjustment on that one. Forecast of 88.9. The more that climbs, the more the consumer believes that our economy is back on track. We're rolling. Again, that could lead to that feel-good Friday. Last week was an amazing, huge run-up. Again, if we get a week of negative, 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 Friday will look to rebound back again. We start off with this good consumer sentiment number. Could be a nice little, feel-good Friday trade. Maybe, we could still end up maybe red on the week. But again, if we could end at kind of a daily, or a 24-hour green, maybe a nice opportunity in there for you guys if you're looking at it. All right. Besides that, I mean, you can see that there's joint media call, FDA, CDC talking about Janssen. Um, understand, like, a lot of this, you saw the gut reaction today, and then a lot of things, you saw a retracement very, very fast. Um, I don't know. I mean, unless they find something majorly underlining, I mean, you got to look at it this way. Right now with 6.8 million people, if one person has passed away from it within 2 weeks, and six people total have it, remember everything with medicine, everything that you put in your body is always based off risk versus reward. Even something as simple as like aspirin or Advil or Tylenol or some of the allergy medicines that we take, they all have an adverse effect profile, right? Everything has risk. I mean, if you drink too much water, it's bad for you, right? So, in medicine, it always goes back to risk versus benefit. You know, it's just is stopping COVID, or if stopping COVID, I mean, I guess we can't really figure it out the exact amounts because it's only based off small studies. But I mean, if 90% of the people or 96, it has a 96% rate of keeping you from getting COVID or having really severe symptoms of it, how many more of those people would have died had they not had it, is how that they're going to look at this in the long run, right? So I mean, that's kind of what they're probably discussing, is how serious it is, or they can they prevent it, or is there a way to know that it's going to happen, or are there certain populations that don't. But I do believe that Janssen's I do believe that the J&J shot will end up back in the arsenal again rather soon. So again, gut reaction down, probably a turnaround back up again. Okay. Um, Besides that, I wouldn't say there's really a lot in here. Um, Interesting here from Bloomberg that day traders know a bubble when they see one, and they want in. It's kind of like, oh, that's an interesting kind of headline there. Let's suck people in. But besides that, a lot of it is just low. It's, Barkin is speaking here, Harker speaking. A lot of the lower kind of impact, Fed members. But we'll see. But look, the U.S. seems to be on the verge of achieving its rebound. So it's amazing. We need all this stimulus and continued effort, but it seems like we're on the verge of rebound and recovery. So I don't know. It's kind of, we get mixed signals every time somebody talks. It goes back and forth. So we shall see. So let's dive over and let's look into the indices, right? So starting off up top, here's the ES, right? Now the ES, you can see, took a very, very fast drop down. And again, this is what I mean by support and resistance, or not even support and resistance, but supply and demand trading versus support and resistance. There would have been a lot of support in here that all got blown through. Part of the thing I like about my style, again, you guys don't see 8 trillion indicators. I don't have a bunch of magical percentages on here. I don't have, MACDs at the bottom and RSIs, buying pressure, selling pressure, all those things. I keep it very simple. I'm looking for large movements in price. And I talked about it earlier today. I mean, here was a nice little pullback, right? We knew the buyer stepped in here previously in the past, and it gave us a great rally up, right? Well, as this collapsed back down again, everybody's like, oh my God, this is horrible for the day. And they're selling it, selling it, selling it. And what did it do? It turned on a spot. And I think this one ran up to, let's see, right. I think there's the high. It was a 1 to 8.6 risk to reward ratio. So we're kind of right back up to where we were, right? We've lost J&J, and bam, we're all the way back up again. But think about all the people that were like, oh man, look at this. We broke through the high, right? We broke over the top. It's going to be a green day. They bought it, and then wham, slapped to the downside. And then they're like, oh my God, I got to get out of my positions. I'm losing money, right? All my positions, close, close, close. Like, oh my God, I need to short. J&J just got pulled. It's going to be bad. And then what did it do? It went right back against you again. So at the end of the day, I mean, we're only not even at the end of the day. We're a couple hours into it. All the news was absolutely erased. We're back up close to that kind of magical figure up there, looking around. And what 41.25? We're looking up there, actually a little bit higher than that, 41.27, right? And we're sitting right there within 3 points. So, you know, magical. What happens now if they decide, hey, listen, J&J's back on the thing. It's deemed safe. It's reducing it by this, yada yada yada. It's great. Why can't this go higher? So, I think the important thing to watch out for is really how do we get defined risk in positions like this? How do we find new places to kind of establish? And again, right now, I would say, the 30-minute candles or the 15-minute at the open has been really the best way to grab these ones lately. I would say right now, I mean, even with the 15-minute, because it's news based, I like what's happening right now. I mean, you may look at this and say, well, wait, why is it kind of stalling out? Why it's not doing anything? How could you like that? I like it because it's showing me there's a little consolidation up top. It's starting to form a little bit of a level in here. I mean, I could take a level and kind of put it in here. And again, that may or may not hold, but this is more. It's not so much to go long off of right now, but it's a level that I want to kind of keep there and say, okay, listen, we've had basing here. We've had basing. Sellers have been able to punch it down, punch it down, punch it down. Where, yes, I see. Go ahead over there. Oh, she's found the post-it notes. They're all over. Um, It's an area where I can use as a defined level of risk, right? The next time it punches through, it will typically pull back because, again, there'll be that support and resistance trap. People will say, hey, listen, if it breaks here, I'm going long. It's all time high, baby, right? Because people have that fear of missing out, right? As it punches through, look for a pullback, and now we have our established level of risk, right? And the question for me, people are asking, it's like, well, how do you know that's it? Well, I know there's basing, and I know that's a big area. I mean, some people say, well, I'm going to take this much risk. Okay, well, then I would need a lot more movement. Because remember, where your defined level of risk is directly carries over, and that's how you position size. That's how you determine if you're taking one contract or 10 contracts or 20 contracts or 50 contracts based off of what the level of risk is you have. Well, if I take this much risk, obviously my position can't be as big. If I'm taking this much risk, I can take more positions. You guys see what I'm saying here? So that's why this basing to me matters. And right now, I like where it is. I talked about setting alerts. I would set an alert at 41.28. And then what happens is I don't have to do anything. I can go about my day. If it goes through, I'll get an email or a text. I come back and say, okay, is it in a position now? Has this level held here? And where can we go going forward? Because right now, remember, CPI is going up. It's justifying it. The rest of the data, the rest of the week looks pretty good. The only kind of landmine that I'm watching out for is news of a COVID spike beyond levels that they don't like. Because again, that's the juicy story of the week because of spring break. Not that everybody doesn't expect that, or not that the experts or traders out there don't expect it. But again, when the media spins it in a specific way, it's kind of like, hey, all right, I gotcha. All right, so that's how we're looking at ES. NQ. NQ, you will see, it's like, wait, what? Why did it go up, right? NQ doesn't care about COVID because NQ was able to kind of benefit from it because it's technology based, right? We lose one option. Okay, people can stay home longer. They can buy more computers. And you'll say, wait, what? How is this going up? It's because it's good for the NQ, right? I mean, here's the 7 o'clock news. Hey, listen, J&J, ain't got it anymore, guys. Sorry. Oh, but by the way, people are spending a lot of money. Straight up through the roof, right? Now, looking at this one, on the 4-hour level, I think is important. And you can see the last real peak was here. And this is a very, very big push up. And this has been coming for a while, right? I mean, going back to it daily, you can see same thing. It's like, well, wait a second. There's the last time we had a peak, right? February, right? And then beyond that, it's like, wait, there's not a whole lot of other data here. So again, it's getting to that territory that you're looking for. It's like, all right, well, how do I play this going forward? And you do it the same exact way, right? We take it, let's bring it down to a lower time frame. We can take it down to 15. It's fine. And like I said, I do the same thing. I think 15 minutes also matters the most on this one. You see there's a lot of opportunity down here. Look, 7 o'clock news, right? Sitting in a level, right? 15-minute candle. Whoops. 15-minute candle. There was your level of risk right there. There's a level where we had buyer step in, came and confirmed. Here's the European Open, bounced off of it again. 7 o'clock, and you're like, all right, we're getting close there. Let's see if we can get it. And all of a sudden, J&J data comes out through the roof. You see how you have to grab these on the lower time frames? And again, this was established yesterday afternoon at about 3 o'clock. So right now, kind of do the same thing. I would say I'd want to see what form the new overnight, but I'd probably use somewhere in kind of that range and say, hey, that'd be my first attempt at this one, right? Kind of see what it's looking at. I know I got some buyers sitting right here as it pulled back. They stepped in and punched this thing higher. Question is, can I get a break above this? Set an alert right here. Right? Set that alert at, where's it at? 13,950. Once you get alerted that it's broke through the top, remember everybody and their brother that has ever read a book on support and resistance is going to go long, and they're going to put their stop loss right below here. So the goal is, when it pops through, if you can get a pullback in, it's going to be hitting their stop losses. Be the person that is giving them their stop loss, taking them out for a loss, and then you get it on sale, and you're able to ride higher. But I do think this week, I think the NQ has the ability to go much, much higher as well. The birds obviously like this trade. Not sure why they're so excited about it, but they're really into the NQ right now. But I look for this one to go higher as well. Now remember, in trades like this that are continuation trades, the way that you play them, and again, this is kind of one of those things that makes it a little bit difficult, right? Remember, I mean, look at the Nadex products we have to use, right? Binaries, absolutely we could use them, right? Because as they go farther and farther and farther, we're able to take advantage of them. And they get reprinted every day. There's different short duration contracts. There's longer duration contracts. There's daily, weekly. So there's a lot of things we can do here. We have call spreads. And again, call spreads get reset really on a daily basis. There is shorter duration ones. And these are good because remember, while they have a ceiling and a floor, right? If you get a pullback, it doesn't necessarily stop you out. So if you have a case where it pulls back into this level here and your knockout was sitting at this level here, your call spread, you're fine. Where if it was a knockout, a little bit more difficult. So remember, in situations where price is literally just going in one direction, knockouts tend to be a little bit harder because they keep breaking, 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 and they end up in the middle a lot. They're not necessarily near a ceiling or a floor. All right. So that's just my take on them. When we have a one direction type market, again, I think call spreads are tend to work out better for me than a knockout, which I like more for reversals when you can find them. I think knockouts are definitely have some amazing things to trade, just not in a single trending market. Looking at YM. So YM made an attempt. It wanted to go higher. We talked about it. We had that level of basing here, and it was easier to see on the 30-minute. But we collapsed right into it here. There was your same level. There was an explosion off. It hit it, and it made it almost to a 1 to 3 before coming back down. And you can see here's that 9 o'clock window, and we talked about it during the Nadex presentation. Like, listen, once the retail trader gets a hold of this thing, it's probably going to go down, right? I mean, there's going to be so much. Oh my God, J&J is gone. We're in trouble, right? Everybody's short the market. And again, there was your initial response. And what did it do? I mean, if here's the 9:30 candle, right? So the early morning retail futures traders dropped this thing down. If you were waiting till the market opened, you're basically you took a bit of a loss and came back down again. So it's in a consolidation phase right now. And again, the one nice thing I like about this trade is if this one does continue to push lower, which again, I don't know that it really, I don't think too much justifies it, but the Dow's an easy one to go after. Um, you know, I would say this one is kind of set up where we could start looking at, listen, if we come down here and base again, there is a potential short, but I would say watch out. We have two areas that have been tested. One of them at 33,416, one of them at 333.83. Where buyers, again, they stepped in here, they halted it and launched it. And again, here, a base, they came down and halted it. They bounced it, and that kind of is where the last takeoff was. So we do have some levels lower here. Let me actually just bring that one across. It'd be easier to kind of focus on that. So the biggest problem with just taking it short and really me spending the time setting it up is I know that I have two small levels in here, right? I know that I have two small levels. I need to make sure that I balance my risk to where it could potentially move to profit-wise. Right now, if I set up any type of a small-term short in here, I got to go through here and I got to go through here before I can hit a 1 to 3 risk to reward. And I just don't have enough space. So I'm really kind of waiting for a balance. And, although probably negative today is what it looks like it wants to do, I'd be looking for this to bounce up higher. When we do find a long in this one, though, again, I'd be looking for a profit target, or at least profit taking around 33,654. Looking for, and again, I don't know which one of these three it's going to go. I got to wait till we get the actual confirmation in. But I'd be looking for it to come up and come back up into this level over here. All right. It could happen with any bit of news. Like I said, tomorrow there's a couple different news releases. We have Powell speaking. Any of those things are good. And again, Powell can make a comment saying, hey, listen, the economy is doing great. We saw some inflation, but again, we need that sustained. I think this is transient. I think it'll go back down again. So we're going to, he could reaffirm that we're not changing interest rates till, most likely 2023. And that should be amazing for the Dow tomorrow. So again, it is lining up on a fundamental basis, and it may actually, move earlier, in the European session. All right, mixing it up. Let's go down to currencies and see what we have down here. Now, Aussie dollar, you can see, has kind of been back and forth. And again, right here at 8:30 this morning, this is the CPI data. And what did you see? Dollar weakness coming in. Right, dollar weakness coming in. Which you may say, well, wait a second, but we had CPI that was high. And you're right, we did have CPI that was high. But we also have the Fed saying we want it to be high, and we're going to let it run high for an extended period of time. We just don't know what that is. So again, a little bit of weakness coming in here, but it's really doing nothing more or less than channeling. I mean, here's the 30-minute chart. You can see we talked about levels here, and again, we touched it last week. We bounced it here, and then this was really the fourth, but not really much in here, and this was the first clean level that we had. Again, this one was from last week. Let me just take that one off. We don't need that one right now either. And actually, this green line was one we were looking for. It was a knockout from last week, but we're not going to use it now. So right now, again, is there really a trend in the Aussie? Not really. I mean, right now, in 24 hours, it's moved 9 pips. It just doesn't really have that much movement. And it looks like it's been great, but what did it do? It came all the way down and then came all the way back up again. From this morning, we're talking about 50 pips. I mean, if you caught it at the 8:30 window this morning, and again, playing one of those shorter duration contracts, if you had played a 2-hour binary off of this one, trying to take advantage of, and again, the reason why you would have traded a 2-hour binary on the Aussie dollar, you may say, wait a second, we're talking about inflation. The heck does that have to do with currencies? Inflation directly flips over to gold. The proxy for gold is the Australian dollar. Okay? Again, gold strengthens, Aussie strengthens. Okay? Here, from here to there would be a 2-hour binary, right? That movement was about 50 pips. And if you guys don't know what the strike differentials are, go check it out, right? That is many binaries in a 2-hour window. Many binaries based off of the strike difference. Okay. I don't know if anybody has their platform up as well. I know some people do. But for example, I'll pull it real quick. That one's expired. Doesn't matter. Yeah, you're looking at a strike differential of what, 4? Right now, the 11 to 1s are 4, right? So, yeah, watch out for those. A lot of movement, very, very short period of time based around news. But right now, I would say, levels that we need to watch out for. We know we got a level sitting up here, and that may be the decent top. I would say, we've seen price come through this, and this level's been broken before. That's why I'd keep it in orange. You can see it was an old level. It was a top. It was a top. It based in here and kind of was peeking its head at the bottom, peeking its head out the top. Hit, bottom, top. Bottom did the same thing, gave us this kind of Harry Potter, right? We broke through it. We basically pulled back and dropped. And then we touched, and actually we touched. So this is going to be hit number 4 going through, right? You guys know what hit number 4 means, right? We got 1 there, we got 1 there, we got 1 there. Whoops, 1 there. So next time it's coming through, we would expect this orange one not to hold. Ideally, it blows through it, but I would say right now, I'd be looking for most likely up here, 76.70. And I would say on bottom side, 75.66. Kind of gives us a top and bottom, and depending on when we get the new call spread contracts, there may be, maybe potential reversal areas. We're at a small level right now, too. I don't know if you guys can see it on here or not. Sitting right here. But again, nice little base, nice push. There was your first hit. There's really 1 or 2. This one kind of got front room. So there again, it's kind of at a level where we're looking for, we could have a reversal. Excuse me. But I think waiting until we get a bit higher is, again, 76.79 or 76.70 is the first really untested level. Very clean 1 candle top push down. These may be a little bit more for the aggressive trader out there. Okay. Aussie yen. You can see Aussie yen wasn't doing a whole lot. It was kind of sleeping, right? Sleeping. European session, we pushed down, and then all of a sudden J&J disappeared, and we came back up again. And again, this was a proxy. It was Australia, the Australian dollar kind of getting some strength back again, and again, it pushed. Here was our level from last week, and again, we talk about the 4 hits. You had your 1, 2, 3, and number 4 is what broke through. Reason I left it alone is because I was using it as a level, right? Again, 1, 2, 3. We expect a 4th break. It did break on the 4, came down, and then pulled back up again. And again, it based in here again, came down. It based in here again. It hit it, it bounced. It came up, a little wick over wick, and again, boom, 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 boom. So it's a level between 83.43 and 83.50. We know that there's something going on there. It's definitely of an area of interest, so watch out for it. In an area like this, while I wouldn't be trading it right now, I am looking for things like this. Okay, remember I said earlier today that I love these nighttime trades. Unfortunately, tonight all we have is the New Zealand rate, and again, it may or may not move that one. But something like this, Australian unemployment change or the unemployment rate and the employment change, if you pair that with a level like this, you have the opportunity to start doing some news trades. If price rallies its way up into there, and again, you guys can mark it off on yours. The top is the 83.51. If we're sitting up there, we could set this up for a potential drop from that level before news. Okay, it's one of the ways that I do like pre-news trades. Like I said, I don't have a crystal ball. I don't know what the news is going to be, but I do know based off of a technical level, when price hits that level, sellers have stopped in many, many times. It may come up and start the base in here, hours and hours beforehand and start to push higher. And then great, I just move this up and I'm looking for something up in the level that's a little bit up here. But right now, it's an area that I'm keeping on my charts. I think you guys should as well. Not so much for a long because you have some levels in here that are pretty dodgy. But again, 1, 2, 3, 4 was the magic number, like we typically talk about. And then again, you can see base, 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 little chop back and forth, and then touch, 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 all in that same exact level. And again, it's not magic. There's a reason why these are the levels are here. You just got to figure out how to use them. Okay. So that's the near-term target on that one. Euro pound right now is kind of just going sideways. We had this area here that we talked about, and it touched it and came back down and kind of got front run. And once it based, we knew it was going to break like late last week. This was the diagram that we drew last week, so that's why I like to leave them up there so you guys can see. Right now, there's really not much going on. I mean, the euro pound is up 19 pips right now total, and that's basically It's a little combination of both. A little euro strength, a little pound weakness, right? But I wouldn't say anything is really earth-shattering right now with this one. It's more or less going sideways, and the way that it looks right now, it's done its spike and now it's having an issue. I would say to me, it looks like it's going to roll back down again. Just recycle this one. Where it's going to roll down to, it's probably. I mean, this one got pushed very right to the brink here. It's probably going to go a bit lower. I'd say probably more in this level here. I have to shrink it a bit. Let me drag this across. There we go. Probably more in there. I like how that level. I like the spike. I like the way it touched it and took off again. So I would say right now for me, I'd be looking for a bearish position here. Their markets they're closed for the day, so not much more else we can do with this one for right now. But I would say if we start ticking down or we stabilize here, look for this one to kind of retrace tomorrow. Again, it was a decent move up. I mean, 70 pips is over the ATR, so yeah, I would expect a bit of a retrace. Probably a push back down again. Make sure you have if you're getting profit in this one, make sure you get out before this 86.29 level. But that would be a level where I'd be looking for a potential roll. If we can get there before a European Open or some type of, I mean, I'd probably say European Open or some type of a speech. We do have a speech here. Again, tomorrow at 10 a.m. Right. So what we may see is depending on what the market feels, the if it's going to be more of a kind of a weakish type position, we may see this one start to rally down in preparation for touching this one before the speech, and then a bounce back over, right? And again, small level of risk. I mean, we're talking about a little level here that's been tested by buyers one other time of only 8 pips. So again, keeping a risk very, very small. Okay. Hold on one second. All right. Euro yen. So euro yen is also chopping back and forth. We had established levels last week. We talked about 1350, 2958. Again, we touched it once, we dropped down, we came back and did a little bit of basing, and then again, it collapsed all the way through. Came all the way back down, touched the 129.58, came all the way back up again, and you can see if I continue this across, it provided opportunity here, provided a lot of opportunity here, provided opportunity again, and now it was unable to get back up to that same level. So again, is it a level we should keep taking sells off of? It's kind of worn out at this point. I'd be looking for the newly established levels in here, and we may want to shrink that a little bit. On a 30-minute chart, I mean, obviously we obviously have a level of basing right there, right? It's a front run of that position, but again, all the movement up again, it punched, and now it's in that failure to go higher. I would say to me, it also looks like it is in a situation where we could be going back short again. Right now, I mean, you're pretty clear to the downside. I mean, you got from here down with not really a whole lot of testing, right? It's not bad. I would say we still need to watch out for this 29, and I'll actually slide this across just so we can continue to bring it out. But 29.60, 29.58, this was a very, very fast drop and almost an immediate roll as soon as we hit that position. So again, that's something you're going to have to focus on and watch, and maybe even use it to set an alert. Maybe kind of up in this area here, give yourself a little bit of time to get there at like 129.62. If you're not short that position, kind of look at that one. That may not be bad. Let me see. I'm going to check real quick where the knockout is on the top side of this one. Shh. We're at 130.32 right now. Man, there's a 130.52. So there's one sitting right. There's a knockout bracket right there, right? So remember I mentioned early on that you can use different things to trade, right? There are times when you use, again, when the market's continuing to trend in one direction, the call spreads tend to be, in my eyes, a little bit better. But when we have reversals, knockouts are great. How about this as far as kind of where your knockout is versus your established level of risk? It's in the larger zone. We know it had a failure to go higher in this year, in this level. And if this was your level of risk, I didn't catch this one because I was doing the broadcast this morning. I didn't see this one, but at 9 pips worth of risk, and actually from to the knockout, 11 pips worth of risk. And again, you've already seen a nice little push to the downside. You'd still be up in the position. It was a decent run back to the downside here. Let's see. It would have been from the top of the knockout. You were about 30 pips into it. So Again, a lot that, decent little trade setup, but I would say, yeah, definitely being short up in that area makes sense. The 129.58 down below, there is actually another knockout down here at 129.52 right here, right? Yeah, 129.52 flat. That's in a half. Might as well put it 150. Yeah, it's close as I'm going to get. So again, here could be the other side that's probably decent, right? If we can push back down again, we know that it's held. There's going to be risk in every trade you take, but again, pretty close in there. So that could be a decent thing to the downside as well to be able to grab. But yeah, there's your range for the day, for the week. Euro dollar. So obviously, large spike up. We knew that we had a level. We got front run last time we were there. You can see that we touched and pulled back and we're stabilizing. I would say just like the euro yen and euro pound, as much of a spike as we had up there, I think we do have to look for where this one's going to roll back over again. And we've talked about the level. I mean, when we bring it up to a 4-hour basis, you can see that this is a level before that we had. This is a 4-hour level. It's a big level, right? I mean, it's tested a little bit. We're pushing in there, but again, the European market is over. Anything that Powell says, or if we get any type of dollar strength, or any comments about interest rates, or we could potentially be looking at raising it. And put it this way, anything that is even remotely positive for the dollar, again, that's going to be leading this to kind of turn and roll. So I would say I'd be looking for short positions. Unfortunately, right now we're stuck inside of the, we're still in the top section of it, but I'd be looking for this to roll. Let me click knockouts real quick. We're at 119.34. So 119.47. That's here. It's probably a bit close. There's a 119.97 that's all the way up here, probably a bit far. So looks like the knockouts are not matching up to the ideal situation. But I would, like I said, we don't really have much news later on today. I don't think we'll get a lot of movement. This would be one that I think it's going to be, watch it tomorrow morning early, because I do believe the market will position itself before the ECB president speaks. All right. But I would be looking for some, again, it's already a level. It's a 4-hour. I'd be looking for this to come back down again. Make sure you're getting profit on it, though, before this 18,800. Buyers have definitely stabilized and supported this level here. Okay. Pound yen. So pound yen, this is awesome. It bounced, it came back up. It bounced off the next one, came up, bounced off the third one, came back up, and then ended up basing through. We're really waiting. And again, we were talking about how these were profits, not really kind of launch points. Our first green level was down here at 148.76. We mentioned it maybe not being able to get down there. That again, the pound is in a pretty good position. I don't know if you guys know or not. The pound now, the UK is officially more recovered and more controlling COVID than the United States is. There's been some data out now. They've actually they have a different vaccination policy than we have. Their policy is they're prioritizing first shot versus getting the second shot. So they have many more. There's definitely much more awareness of is like, listen, we need to get as many people that first shot as possible. And right now, their hospitalization rates, their death rates, everything is going down, and their control is going down. Versus ours is all stabilized and is going back up again because again, we have over half the population that hasn't even had their first one yet. And their goal is to get everybody vaccinated with at least one to get that basic level of protection to basically lower infections, lower hospitalizations, and again, even potentially, halt mutations. If if you can't get it, then it can't mutate in you. So, again, it's hard scientific data at this point. So, again, I think there will be some good news coming out of the UK. I would be looking to figure out how to find, get these positions long. As they open up, there's been some hiccups, and again, this is pushed down mainly because of the yen. But again, look for this one to retrace and kind of come back up. We are now officially in the green section of the curve, looking for long opportunities. Pound dollar. Okay, so pound dollar. These were knockouts from last week, so I can take these off. We don't need these anymore. They were old. So here were the two levels, and again, we talked about there's a lot to chop through in here. And you can see it came down pretty much exactly to the same point at this lower level. We were looking for this really in this range to kind of come and hit. This is over the weekend. This is over, this was yesterday. Right here is where we started the weekend. And it's just really, I mean, we've pushed down, we've pushed up, and we're right back where we were on the weekend. So we're basically at the Friday close. It hasn't done a whole lot. Looking at the bigger levels on this, when we brought it up to a 4-hour, we knew that this was going to be a kind of an interesting level because it wasn't where the origin occurred. This is where the origin actually occurred. These were small time levels, and we were looking for something clean to come in there, and that's the levels that we were dealing with. And we knew that we had pushed it to the very, very brink, and we were trying to get aggressive with this one on Friday, hoping that we have some blockbuster news, and we didn't really get it. It just kind of faltered through. So we do have buyers sitting right below this level. right in here. And we've kind of hit it. We know that they're down there. So, I mean, ideally at this point, I mean, I'm kind of a wait and hold. I think this one has great opportunity to go higher. I'd really like it for it to kind of come back up again. This was a level up top we were looking for. We can remove some of those. That short was good. There's a profit target out. We can bring this across. I don't know that I would short off of this one again. 1, 2, 3. No, I would not take a short off of this one again. Yeah, I would say, let me see on 30 if I can dial this zone down a little bit. All right. Yeah, that's probably fine. All right. So I would say right now, I'm going to extend this across. We got a little bit of room to run. This one would have to come down and drop about 68 pips, which it could do that. It definitely could do that. And again, whether it does before the UK Open, it may need a little bit of help from Powell. But I would say keep this on your radar. This is one maybe not today, maybe a tomorrow type thing, late tomorrow. But 136.65 is an area where I could see some bouncing coming off of. And again, it's not a little, not necessarily a bad room to run. I think it can get up, and we'll see what the basing looks like here. But I think this one has the potential to, again, potentially take a balance and probably start to have some hiccups up in that area. So again, this could be a decent run to the top side. It's about what, 87 pips. So yeah, some decent opportunity off of that one, particularly for a pair that we can do the small duration binaries, right? The 2 hours on this one. So yeah, 136.65. Dollar CAD. You can see that dollar CAD is had a rough morning, right? Had a rough morning. Again, here's your 830 CPI number, and the result to the downside was 91 pips. So yeah. Now, this is a level, and again, you can see we punched up into this 126.30. We knew that we had sellers. There was a lot of sellers up in this area. Last week, we had a level just sitting just above that level. And again, how do you trade this? Well, it's at 8 o'clock, 8:30. We know that news is coming in. Look where we're at. After we've had a big rally in pre-market news up, what do? You look to the left. You see that sellers have really, sellers have stepped in here. Sellers have stepped in here. Sellers have stepped in here. And again, this is kind of the area where this entire bracket right here is our selling area. We literally spike right up before news, look for a short duration contract to the downside. Here's your move up. And again, you could have considered this a parabolic move. Let's see, 8:30. I'll do it to 10. It's to there. 55 pips. Again, 5 strike prices in less than 2 hours, okay, in the binary realm. So again, great trade. Now, where we're at now, we are in an area of buyers, okay? So I'm going to move this down just to make it easy so I don't have to draw more stuff. You guys can see here, there's your level of basing. We've hit it before. We're hitting it, and we're starting to stabilize now. Again, this has the potential for a parabolic move to the top side. We have Canadian data coming in later this week. Again, it's going to require the dollar to kind of flip and roll back on us. Pretty much everything was dollar week today. You see dollar CAD is down, dollar Swiss is down, dollar yen is down. Pound dollar is up, euro dollar is up, Aussie dollar up. So again, it is a dollar weakness story across the board. But typically, you have retracements when you have when you have straight down for a day, you tend to roll over and head to the backside. So again, for those of you that like some of these, slower swing-based trades, I would say there's some potential down here. Now, if we do come down and start to push through this level and break, we do have a Harry Potter from last week that we set up because, again, it was a level that was pushed to the brink and we liked it, and it was a break of 125.06. So, again, if we can get a punch lower, profit target's down at 129.86, a very small little kind of runner in the morning. Again, this can be affected by oil a little bit, but I would say right now I'd be looking more for a bounce off this level. It went up right into that level to get it, and then again, straight down because of CPI. The dollar has to rebound a bit as profit taking steps in. Now, dollar Swiss. Dollar Swiss is dropping for a number of different reasons. This was a profit target from last night that we hit, or from yesterday that we hit. We had some shorts in here. We ended up getting it. You guys can see that this one came, base, pulled back, and again, this one is out. That was a good short from last week, and we've tested it a few times. I would say right now I would urge caution with this one. Okay, as you can see, we are kind of in the middle, right? There's an area here that we know, we were basing off of, but again, we've touched it once, we've touched it really kind of twice, 3 times, and now we are breaking through. There's a small level of buyers sitting right here, and then a tested level. The reason why I would be cautious with this one is because although I do expect some dollar strength to come back into the market, geopolitical events like G7 and Russia and the Ukrainian border, they have the ability to get stimulated very, very, or will stimulate the price of the Swiss by a lot. Because again, anything that's geopolitical, war, troops, missiles, nuclear testing tends to bring strength into the Swiss. So it's just one of those pairs I'd urge some caution. I would be looking to this one to go a bit lower. I would say, look at taking profit in this level here, as well as there could be a potential bounce off of this level here at 91.50 or 91.49. Reason why is we had a nice pop, we based, and it kind of pushed its way off. And when it fell and retested, that was kind of the big push. And it's again, we have buyers stepping in to save it, so we know it's a test level. It's rather small, and again, if we can push down in the overnight, that could also be a European bounce. Now, dollar yen has had some issues. Now we'll drop this one back down and go to we'll go to a 30-minute. You can see I wouldn't say that this is earth shattering. Again, a lot of chop back and forth. It's kind of like, well, what's going to happen? We're at a level right now, right? You can see right here. There's a level that it crashed. Buyers basin stepped in and came back up, and now we touched it and bounced and kind of came back and fought it again, and we're pushing again. I would say that it's probably in a decent level. Last week we were looking for profit taking right here at the 129 level. It ended up crashing through it. Again, it blew right through the profit target late in the week, so it was not anything we were looking to reverse on. We were really looking to stay short because it was in this top third. I would say, as much as I'd love to say, hey, listen, take a Harry Potter here, this is going to be hard to we're going to have to grind through it. It's going to be a chunk all the way through. And again, we got a decent little pop here. So I would like to say stay bearish, or I'm more bearish this position based off of where we are on the 4-hour curve. Looking at this one more to come to the downside, but unfortunately, I don't really have a great setup. Like I said, with the indices doing what they're doing, they're helping the yen out right now with a little bit of dollar weakness, but I think that will reverse as well. It's kind of a battle that I just think there's better opportunities out there. Okay. Now, jumping across the commodities, we only got a couple minutes left here. This is oil, right? So oil, here's where, here's what we had at 10:30. Here was the European move up. Here was the retracement from the 10 o'clock down, and we just kind of based on the same level. And again, there's your level of basing. There's what we crashed into. And again, the 9:30 open, oh my God, COVID, J&J, bad, demand down. We crashed right into it. And then at 10 o'clock, we're just grinding, right? Grind. And again, here's today's COVID data, right? Actually, this wasn't COVID yesterday. Yesterday was actually just the news. Today, the COVID data is right here. There's really nothing, right? We saw a little push down, and then it just stabilized and pushed back up. So I would say probably an okay level. Here's where, we were looking at a level from last week, and you can see we had a small touch. The way to play this one, and I say it every single week, the two times you're going to look at this one is going to be one at the European Open. Here was the European move yesterday, right? The European move yesterday on the 12th. Right now, it's a level we got to respect. But this level right here at, where are we at? 59.56. If we're there at the European Open tomorrow, which would be right here, I could see it doing this tomorrow, coming back up into probably the 65 range before the oil inventory report. And again, remember, we're supposed to be negative tomorrow, so the market has to position itself to have that negative number. So I would say right now in the overnight, expect this to drop lower, but I do think 59.56 is a decent level. If we're able to base and stabilize and break down, and if we're over here for the European Open, then again, my assumption would be that we're going to do this pre-market tomorrow morning. Now, gold is up. Obviously, you know why. 7 o'clock, here's where J&J got pulled out. Gold went up and CPI was sitting right smack in the middle, like right here. So, I mean, it had already moved, right? Again, it's kind of one of those things. We had no idea that the COVID data was coming out. But it's a level we talked about. We talked about last week, 17.29, down here into 17.25 levels, and we hit it. We hit it again. We hit it again. So, we knew it was not an area where we were really looking to just blindly take it off the top. We were looking for the base, right? And here's the base. Here's it's a European Open too. There's your European Open base right here. 3 o'clock in the morning. There's your 6:30 kind of COVID news bouncing right off that same level last week that we talked about. And again, I'm going to carry this forward. There, I would say, is probably your top and bottom for the week. Or not, maybe not for the week, but at least for the foreseeable future, there's your top and bottom if we come up or down. Keep 17.55 on your radar, and again, this one can be adjusted slightly lower now. Again, it's going to act as a profit target first. Look for a bounce. We'll pull this one across, and right there. So 1755 and 1725 to the downside. Now silver, bump, 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 big pop off silver. Last week we were looking for targets at 24.77. We got it and it did nothing, right? Nothing. And the second it touched the bottom here, right? There's a small level there. The second it touched the green, it was like, no, no, no. Yesterday it took off and came all the way back up and then grabbed the level up top, right? Another level we were talking about. So we're still kind of floating sideways inside of this blue area, the middle of the curve. So I think silver will probably reverse a bit. Yeah, the inflation was good, but I mean, who the heck knows what Powell's going to say tomorrow? The way that it's looking right now, and again on the smaller time frames, you can see that it's kind of consolidating in. There's our highs, and our highs are getting a bit lower. We know we got some sellers here. Again, the sellers stepped in here. They stepped in here. They pushed across here as well. Oops, not that far. There. So again, sellers, turn them around right here again. Parabolic move up. This one most likely would, is going to probably come back down and test levels down here at 29.95. I won't be surprised if this is sitting at 25 tomorrow. All right. Now, Powell will have the ability to kind of, change this around a little bit. Talking about saying great. I mean, if he's dead set on talking about inflation tomorrow, again, silver is kind of like a faster moving gold, right? It's bad, it goes down quicker. If it's good, it goes up faster. Right now, gold sentiment is back up to 83%, right? 83% of clients are net long. So, that helps. It was 83 earlier today. And again, now they're starting to do that profit taking. It's starting to get lower than it was, meaning that the people that got this burst are starting to get out again. So, I'd say look for a rollover. But, got to say, if we can get back down to 25-ish, I'd be looking to take some buys on this one. All right. So I think that's it. Natural gas is also up big today. TLT and bonds are up today. You can see TLT is spiking for those of you that are following bonds. You can see right now, though, it's slightly delayed. Dow's down a little bit, but NQ is like, hey, I don't care. I'm going to keep going. But again, look for a potential opportunity to get short in the overnight. The dollar index is down about, 0.21%, so nothing too crazy there. So, yeah, interesting day in the market. And again, we'll close out on this one. Remember, tomorrow we have ECB Prez speaking at 10 a.m., so that's going to be an important one. It could completely reverse all the European strength if they talk about needing more and more stimulus because they don't have things under control. They are behind on their vaccine schedules. Crude oil at 10:30, Powell at 12, and then again tomorrow night, please, please, please go check out the Australian dollar tomorrow night at 9:30. Last week it was a great one. This one again, it's set up to be a good one. Depending on what level we're at, and we'll touch that tomorrow morning. So again, I'll catch you guys next week. We'll be back on for the big session. But if you guys are able to do it, don't forget every single morning, Monday through Friday, 8:45 to 9 a.m. Eastern Standard Time, we do kind of what's hot for the day. Tomorrow morning would be the time to get those oil levels. So if you're interested in trading oil tomorrow morning or playing any of the other economic news data, go to YouTube, go to Nadex's page, click the follow button, and click the notification icon, and it'll even send you an alert to your desktop that says, hey, listen, they're going live right now to find the best opportunities for the day. All right? So with that said, I'm out of here. Any questions, go to the website, shoot me an email at support@keeptrading.simple.com. If not, attend tomorrow's live broadcast. You guys take care.